Everybody, welcome to Thursday. The S&P 500 was down 1.8% today. And unlike yesterday and the day before, the NASDAQ was actually the bigger loser today. It was the bigger winner, actually. NASDAQ was down 2.1%. So what we have today is like a polar opposite of what happened yesterday. Yesterday, we had a great up day, lots of green on the charts. We had a couple Fed governors during interviews talking about, reconfirming what the Fed had already been talking about before, 3 to 4 rate increases, maybe not, having a 0.5% increase in March. And then today, of course, was the inflation number that came out. It was at 7.5%. The expectation was 7.2 to 7.3%. So obviously the market dropped right away in the morning, but then it recovered. And actually we were in the positive territory. And there's a whole bunch of reasons why that might happen. But then another one of the Federal Reserve governors came out and said that he thought they should have interest rates increase by a full 1% by July, which is more than the consensus estimates in general, and more than what we've seen in the reports coming out from the consensus for the Federal Reserve. Obviously, there are multiple Fed governors, and they have different opinions as to what happened. But and as soon as he started speaking, the market started to come down, and we saw this kind of fall throughout this time frame. And what was great yesterday, the day before, with technology and small caps and what have you, wasn't as great today. And energy, financials, materials, those are the things that did well today. So this is an environment that we've been in for quite a while here, where, earnings come out, you see these big companies, the Microsofts and Apples and Googles of the world doing unbelievable, with their earnings. The stock market goes up, we start to see some motion in that direction. And then we get an inflation reading that's high, and everybody starts moving over towards the other side of things that you would buy during a high inflationary period. And I think this is the game that's going to be played right now and has been played here for the last 6 months. And I think it's why you really want to have a majority of the portfolio, like we do, invested in the broad market across the board, because if you go all into one side on the, growth and technology or whatever, that might not work if inflation does really continue to really come strong. You go all in on the other side with value and energy and financials and those types of things, that could work out poorly. Also, if inflation turns out to be, mild throughout the rest of the year, looking at the end of the year, I think inflation gets worse before it gets better. I think the next reading is at least this bad. I think it's going to take some time. If inflation is going to come down this year, it's much more likely to happen in the second half of the year, and maybe it stabilizes here in this first quarter. But nonetheless, one of the things that we want to watch for is just kind of how that works. I'll be talking about inflation and my outlook on it in our summary for the Talk Money with Tom show tomorrow at the beginning. So I'll cover that at that point in time. But look forward to seeing what's going to happen tomorrow, and we'll see you then. Thank you for watching.